JAG University, episode 10. Kevin, we're talking risk tolerance. That's a bigger word. And I think it's a term that sometimes gets misinterpreted differently, right?
Yeah.
From either us as insurance agents to business owners. And what, in your opinion, what does risk tolerance mean?
I think to keep it simple, just how much can you afford to pay out of pocket? Whether you're a homeowner, whether you're a business owner, what is that dollar amount that is knocking you out of the game?
And that's no matter what happens.
Yeah, in anything, even stepping away from insurance, just in general. You know, if I have to pay $100,000 today, am I done? I think that's a good way to start off the conversation. And then when you break it down a little bit, bringing it back into the insurance world, you have things like deductibles, you have things like maybe certain policies that you have or don't have in force.
Right.
And it's removing situations from kind of your field that could cause you to incur some sort of cost that's higher than your risk tolerance.
And I think that really the risk tolerance comes from having educated conversations, more in-depth conversations, right? Because sometimes we're in the spot where, and again, we walk a fine line where we're looking at some past experiences we've had with other clients in similar situations, so we can identify other examples. But every business is run differently.
Yeah.
And sometimes that conversation of how much cash do I have on hand, right? What's the balance sheet look like? What could happen? And you're right, with anything, whether you have insurance on it now or you've decided to not buy an insurance policy for a potential unknown loss, it becomes what can you pay out of pocket for anything and continue to move forward.
Yeah. I think a big one here is, two that we talk about all the time for small businesses. Think of small businesses, restaurants, or, just beginning early stage business. They tend to not have large reserves on hand. At least it takes a few years to get rolling.
Any new business, cash flow is king.
Exactly.
Got to be more creative.
So now when you start thinking, okay, naturally they'll have a lower risk tolerance. So what that's going to mean is you can't have them on huge deductible plans because the second something happens, they're going to have to deplete their funds just to pay their deductible, right? And if you have some sort of frequency issue or some exposure where they're going to have to pay out of pocket for legal fees or to defend claims in court, those can add up very quickly. I mean, we see it the most with cyber and employment practices liability,
right?
Where, those claims can kind of come out of nowhere at any time. And then all of a sudden you're either stuck in court defending some sort of a wrongful termination or discrimination suit from your hiring practices or management, or you have some sort of data breach where now you're incurring all the cost to notify everyone who was hacked and the regulatory fines. If you're in healthcare, you have the HIPAA violations, and that adds up. And then out of nowhere, you're on the hook for thousands and thousands of dollars. And that might be what actually derails you.
I like how you mentioned risk tolerance being something that you could pay no matter what, anywhere. Because so many times we look at, or a business owner looks at risk tolerance looks at what they're currently paying, right? And how can we adjust certain coverages we have? But there's a second part of coverages that they don't have. And a lot of that might be just not being aware that those potential landmines exist. And this is where we go back to the conversations, the education, and the openness of both the insured and the business owner. This is kind of that mutual partnership. If you're thinking that your lender requirements meets your risk tolerance, most likely it's not. And banks' lender risk tolerance is a lot different than yours as well.
Yeah, their requirements are for their risk tolerance, not for yours.
Probably have a lot more money than most business owners.
Yeah, their risk tolerance is a little bit higher, right? And so when you have a conversation that's structured that way versus, hey, what can you take? What is out there that's worrying you? What are the exposures that exist for you in your field?
What's going to stop your business from moving forward?
That's a very different conversation than, hey, I need it cheaper.
Or the lender tells me to buy X. Yeah. I just want the lender requirements. Usually that's not going to check all the boxes that could potentially derail your business.
Yeah, and think about how much money a lot of businesses are already spending in insurance without really having conversations that are focused on maximizing the value. Think about when you buy a car, how much comparisons you do on all the features, right? Especially if it's a nice car. You go, oh, I got leather seats here, I got this engine there, I got turbo over here, and you're comparing all these options, and you're diving so deep and you care so much. And then on your insurance, you're also spending thousands of dollars on it, and you're just really only looking at the bottom line price, and you're like, okay, I guess this one's cheaper. So it's like, treat it like any other major purchase and really look at the drawbacks and the value and the features you're getting from it and see if it fits for what you need it to do.
And I think that's the only way someone will really feel once or understand the true value of risk tolerance, right? The value of buying an insurance policy. So much happens, many people don't know what they're buying or understand how it works. And once you feel comfortable with that, then you can kind of make those educated decisions to kind of figure out what that risk tolerance is.
And sometimes people don't even know certain policies exist to protect about something.
Yeah.
I mean, think about it. It would be horrible if a restaurant owner goes in to buy insurance and he gets his property liability liquor and he's terrified about some sort of EPLI claim, but doesn't even know he can buy insurance for it, and it's never offered because whatever agent he's working with doesn't want to increase that bottom line insurance or lose a deal because he's overselling, and it's just submitting a bid.
When the bidding process becomes very arm's length and transactional, that's where you see the price being the ultimate point by the agents trying to really give some more value as far as what the landmines are. I mean, how hard is it when you're bidding on price and you need to beat something? How hard is it to upsell? Not even upsell, just advise a business owner, look, you need this, and let me tell you why. Those conversations become really far in between. So the bidding process, I think, needs to be a little more transparent, a little more one-on-one, not so arm's length, because a lot of times on some of the larger accounts, we're dealing with people who are in charge of insurance and nobody likes it, but they're in charge of it. And then we're articulating to a third party who then is going to go to the ultimate decision maker. And how is that business owner going to see the value we're providing as agents, right, of what we think your risk tolerance is?
Yeah, exactly. And in any field, it becomes very hard to communicate ideas that aren't in your field of expertise. Like my accountant can tell me a bunch of stuff, and then I turn around and try and tell other people about it. I'm not going to get it right.
Of course not.
I might get the gist of it, general idea.
Concepts, but not the little nuances, which, everything, attention's in the details.
Exactly. So, and the same thing happens with insurance all the time. You see it with a property manager maybe taking the reins on it, or someone in HR or accounting that's handling insurance, and, they don't have their heart and guts in it, where they're like, oh, I'm up at night worrying about this. They're like, no, this is, I'm in charge of this task, and I need to get a good bid, and my boss will be happy.
Right.
And meanwhile, the owner of the company is sitting there worried about a data breach, and he's not even necessarily aware that it's something that is affordable to get coverage for. And maybe he would have liked to see that option. So it's aligning the interests and getting that purpose. And risk tolerance is if you know your risk tolerance, you have to start looking at all the angles and seeing, okay, how can I cross off on the list everything that can get me past that line? You have EPLI, you have cyber, okay, you have storms, I have my property insurance. I have some slip and fall or some sort of lawsuit on my premises, I have my liability. So for anything that can take you over that line, how are you mitigating it?
Yep.
Because if you're not insuring it, you have to be doing something for it. If you're not getting EPLI for employment practices lawsuits, what are you doing to mitigate it? If you're not buying cyber, what are you doing to mitigate it?
So, it's the risk tolerance, like you said, it's about what can I afford to pay for anything at any time. Yeah. Not just what I have insured, what don't I have insured, and all aspects of life.
Yeah, exactly. And then once you have a risk management strategy, you can determine where insurance and certain coverage makes sense and when your internal risk management makes sense. But you at least know what to focus on. If you're saying, okay, I'm insuring this, I'm paying good money to insure this thoroughly with low deductibles, I'm going to reallocate focus over here to something that's maybe a little bit more uninsurable or very expensive to properly insure, or something with a high retention. And I'm going to devote resources to developing proper risk management so things don't happen there that are going to take me past that risk tolerance. But you have to have that conversation with people that know the industry to be able to delineate, okay, we're insuring this, but we're not insuring this. And this is the line of things that, can take us past that level. So it's having that type of conversation versus, hey, get it cheaper.
Yeah. So risk tolerance is having those open conversations of not what you have, what you don't have, but really understanding what could help or what's going to help stop your business from moving forward.